Hello everybody and welcome back to the channel. Today's video is going to be a little bit different. I'm going to be showing you guys my portfolio, the stocks that it consists of, how much dividend I'm getting paid. Obviously you can see everything on the screen right now, but let's go a little bit more in depth. Now, as you can see, the total value of my portfolio is currently 5,167. This is not everything that I have allocated on my account. I just put the stocks that I currently own, but I do have more cash available to sell and buy options. The portfolio is currently down $744. That's the main purpose why I'm making this video, to show you guys what I'm going to be buying now that the market is down, and hopefully what my plans are for the future. If you can see here, funny name, investing for the future. Just try to be funny. It's not really funny, but yeah, let's just go to the summary, which is pretty much the same thing. Now, my portfolio yield, which is pretty much the dividend my portfolio is going to be paying me, it's a total of 1.85%. You know, it's not great. It's not 3 to 4%, but it's not terrible either. It's not below 1%. So my yield on cost, which is what I'm truly going to be getting paid, is 1.62%. That means that out of this $5,000, I'm going to be getting paid in annual dividends about 96 bucks. And my portfolio beta, it's 1. Usually I like to keep this below 1.5 and 1, maybe around 0.9 is very good. This is just how volatile your portfolio is. And the main reason why it's not that high is because most of my holdings, as you can see here, are in ETFs, which I have been buying a lot recently. Now, if you do take a closer look at the portfolio, I do have 4 individual stocks, one of them being Intel, INTC, which I have about 100 shares. Then there's NEO, another 100 shares. We have Pfizer with 30 shares and UPS with only 3 shares. I did have other stocks in this portfolio that I did get rid of in profits, just because I saw the market going down, so that I didn't really want to hold them. And in the case that they do go below the price that I had initially owned them, I'm just gonna go ahead and buy them right back up. For example, I did videos on Kraft Heinz and Verizon, which are stocks that I did own and I completely sold out of it. I am not giving you any financial advice. I'm just letting you know what I did with my portfolio. Currently, the 2 ETFs that I have been adding to the most is gonna be SCHG, which is a large cap growth ETF, and SPLG, which tracks the S&P 500. Now, the reason why I have these both is because I want to double down on tech stocks, if that makes any sense. For example, the overlap between these 2 ETFs, which means the number of stocks that are repeated in both of them, is only about, I think, 25 to 30%. So it's like when you're in the casino and you're playing blackjack, you know, and you get a blackjack, you go ahead and you double down. Or if you get a 19 or something like that, you not a 19, you get an 11, you double down. So in case you get a 10, you get paid more. You know, if you've ever played in a casino blackjack, you know what I'm talking about. That's just the sort of the best way that I can explain it. So basically, I'm buying this ETF because I want to be invested in the S&P 500, and I'm buying this one because I want to double down on tech stocks, especially at the prices that we're getting offered now. I know the market, it's a little bit expensive at the moment, but I want to be in the market because we don't know what's going to happen. My average cost, for example, in this ETF is $27.56, and it's currently down to $25.13. If it drops below $25, I'm going to be buying another share. Same thing here. If it drops below 65, I'm going to be buying another share. The goal is to have at least 100 shares in a year or two. I can buy the 100 shares right now. I'm not going to do it because I want to average down my cost. And obviously, I want to see what happens with the economy to see if maybe I could get it at an even better price. SCHD, I'm going to be adding, as you can see, I'm up like $5. My average cost is $28. It's currently at $28.62. Only have 10 shares. Again, compared to the S&P 500, the overlap is only about 25%. And then between SCHG and SCHD, I think the overlap is like 1 to 5%, because most of these are just dividend aristocrats and huge companies that pay dividends, not necessarily tech stocks. Just to give you guys an idea of the overlap of those ETFs, for example, if you go to SPLG and then we go SCHG, we go ahead and click find overlap. As you can see, 121 holdings of SPLG contain 24% of SCHGs. Of course, if you do it vice versa, since it has less companies, it's going to be a lot higher in comparison to this, but you always want to compare it to the total market, which would be the S&P 500 ETF. And if we could go and do SCHD, find overlap, it's only about 8%. And then if we go to SCHG to SCHD, it's like 0.0%. So I'm really not that overlapped on the ETFs. That's why I specifically am buying these. In terms of the individual stocks, I'm planning on closing UPS for the fact that I am up $25, and I don't know what's going to happen again with the economy. I don't know if fuel costs are going to go low, which might eat into UPS's profits, which means the stock might drop, and then I might be able to get it at a lower price in the future. I'm just not 100% sure yet. So that one's going to stay there for now. Pfizer, I think the company is going to do good in the future. It is going through, I think, some legal trouble right now. I read something on that. I'm not 100% how accurate that is, but I think that's what's going on with the stock. I do have 30 stocks. I'm trying to average down on my cost. As you can see, my average cost is $34. The stock is currently at 27. If it goes below 25, 24, I'm going to be buying 5 or 10 shares. Neo, didn't really want to buy this company. I just got a sign on it because I was selling puts. But I'm not going to sell it. I mean, if I do lose, I'm gonna be losing like $400, whatever. I keep selling puts every 2 weeks, making $9 to $10. So yeah, I mean, in a few months, I'm just gonna get the investment back. Intel Corporation, this is sort of like a homegrown play that I'm doing with everything that Mr. New President is doing now, bringing manufacturing into the U.S. Intel has already invested in infrastructure in the U.S. to make chips. As you know, the semiconductor industry is very hot at the moment, this is Intel's strong suit, and that's why I'm betting on this company. I do have 100 shares. My average cost is $23.19. Again, I got assigned the shares because I was selling put, and I am selling calls since the stock is dropping. I'm making a few bucks on there. So let's go ahead and take a look at the overall diversification of my portfolio. As you can see, total holdings are 7. My largest one is Intel, 38%, which I want to change that. I want to have my largest holdings be my ETFs, especially the S&P 500. And then obviously my largest sector is going to be technology and the smallest industrial. So out of 7 stocks, 5 are dividend payers, the highest one being Pfizer at 6.4%. Now here you can see a little bit of the breakdown of my portfolio, but let's go ahead and take a look at the upcoming dividends. As you can see, my average month is about $8, but I don't get paid every single month, and my highest is about $24, which is going to be in March, June, September, and December. This is so far the dividends that I've gotten paid. This is what's upcoming, as you can see on the dates here, which is what is going to be equal to what we just saw up here. Now, if we want to do a little calculation with this portfolio of what is going to be worth in 10 years, assuming a 5-year dividend growth rate, which is what's calculated with the stocks that I have now, at a 1.85% dividend yield, my ending annual income is going to be $193 in 10 years, and the portfolio value is going to be $8,369. Doesn't seem like a lot at all, but keep in mind this is just with an appreciation of 10%. The stock market usually does about 8 to 10%. Let's be conservative. Let's just do 7 price appreciation, and then annual contributions. I'm planning to do about $200 a month. So let's see, we do $2,400 a year. Let's go ahead and update the chart. As you can see, the difference in 10 years, guys, the portfolio jumped from $8,000 to $46,000. And the ending annual income of dividends is just going to be $728. This is the plan that I have for now. Not sure what's going to happen in the future, but if you don't have a plan, I don't know. I think you should have a plan. There's a quote that says an idiot with a plan is better than a genius without one, or something like that. I don't know, guys, but yeah. This is it so far. This is what I have on my portfolio. Let me know what you think in the comments below, what you're looking to invest in. And if you enjoyed the video, please consider leaving a like. Don't forget to subscribe. And as always, I'll see you in the next video.